In a world where many Americans feel trapped between stagnant savings and rising costs, a simple question haunts countless dinner tables and late-night worries about the future. What happens to the money they worked so hard to earn when inflation erodes its value and every market headline feels like a storm you don't understand? Millions have stared at statements wondering if there is a way to find stability without magic, without guarantees, and without selling hope for something unrealistic. We begin with uncertainty. You might be listening from a kitchen table budget, or from an office desk where the stress of inflation, rent, and unexpected bills weighs heavy. You're not alone in this uncertainty. That's why on Crypto Brainpower, we explore real stock market questions in a way beginners can grasp. Our mission is to make sense of what feels complex, so you don't feel lost. Before we dive deeper, I want to hear from you. In the comments, let us know what stock market topics you'd like us to explore next. What confuses you most about investing? Subscribe to support the channel and continue learning with us. Today we explore dividend stocks, companies that share a portion of profits with their shareholders, potentially offering steady income over time. This is not a promise of riches, and it is not financial advice. It is an educational look at what some investors consider when seeking long-term income. First, let's step back to understand what dividends are. Dividends are payments that some companies make to shareholders, often quarterly. Imagine a business that sells products or services, earns profits, and decides to give a slice of those profits back. It's not guaranteed. Companies can change, cut, or suspend dividends, especially when the economy shifts. Real economic events shape markets and dividends. Federal Reserve meetings can influence interest rates, which affect borrowing costs for companies. When the Consumer Price Index, or CPI, shows inflation rising, investors often re-examine where they put their money. Jobs reports signal how healthy the economy feels. These reports don't tell us exactly what will happen next, but they help frame risk and opportunity. One company often mentioned by dividend-focused Americans is Apple. Apple is known for technology products that touch many parts of daily life. It also pays a dividend. For long-term investors, the question is not whether Apple will outperform every quarter, but whether it might continue to reward patient shareholders over years and decades. Dividend yield, the percentage of the stock price paid as dividends, changes with price. That means the same payout can feel bigger or smaller depending on the market. Another name you'll hear is Amazon. Amazon traditionally reinvested profits instead of paying dividends, focusing on growth. For dividend income seekers, that shows a different strategy: growth over dividend distribution. That's why not every company you know pays dividends, and why understanding your own goals matters. Tesla is a powerful American story, from electric vehicles to energy solutions. But Tesla does not pay a dividend. Some investors prefer companies that reinvest earnings into expansion and innovation. Others prioritize companies that return cash to shareholders. Neither choice is inherently right or wrong. It depends on your mindset, time horizon, and tolerance for risk. Now let's talk about the S&P 500, an index representing 500 large U.S. companies. Many dividend-focused investors look at the dividend yield of the S&P 500 as a benchmark. It provides context. If individual stocks offer yields above the index, that might attract attention. But yield alone doesn't tell you about sustainability, business health, or future prospects. Before we mention specific dividend-paying stocks people discuss before 2026, it is important to reflect on risk. Dividend stocks can cut payments when earnings fall. Market drops, economic uncertainty, or unexpected costs can lead companies to tighten budgets. Investing isn't about certainty. It's about understanding potential outcomes and preparing for ups and downs. One company that has long attracted dividend seekers is Coca-Cola. For decades, it has paid and raised dividends, a trait some refer to as a dividend aristocrat. That history does not guarantee future increases, but it does show how a business can prioritize returning cash to owners over time. Another company often mentioned is Johnson & Johnson. It is a large healthcare company that has also had a long record of dividend payments. Healthcare demand tends to persist through different economic cycles, but no business is immune to challenges. Investors sometimes look at utility companies like Duke Energy because their business models generate consistent cash flow, which supports dividend payment. But utility stocks can react to regulation, energy prices, and economic growth differently than other sectors. Real platforms where many Americans trade include Robinhood, Fidelity, and Charles Schwab. Each platform offers tools to buy and monitor stocks, understand dividends, and research companies. But the platform itself does not make dividends appear. The underlying business does. Understanding dividend yield means dividing the annual dividend by the stock price. If a stock pays $2 a share annually and trades at $50, the yield is 4%. If the price rises faster than dividends increase, yield falls. If price drops and dividend stays the same, yield rises. That dynamic reminds us that markets breathe and move. Throughout history, markets have swung with news. Jobs reports that beat expectations sometimes lift stocks. CPI readings that show stubborn inflation can tighten investor nerves. The Federal Reserve adjusts policy to balance inflation and growth. None of these data points tell a simple story, but they shape the backdrop against which dividend strategies unfold. As you think about dividend stocks, patience becomes vital. Dividend income matters most when you hold over years, letting compounding and reinvestment play a role. It's not a sprint. It's a long journey with learning moments, including times when stock prices drop and dividends feel small against broader returns. So when you hear people talking about dividend stocks Americans are buying before 2026, remember that each choice comes with uncertainty and opportunity. The companies you choose should align with your research, values, and willingness to see through volatility. At the end of this exploration, reflect on your own questions. What do you want your financial future to look like? What fears or hopes guide your decisions? Share your thoughts and experiences in the comments. Let's build understanding together. This video is only for educational purpose, not financial advice.